All right, welcome back to the channel. I want to share with you some real quick trading opportunities that I'm looking at in the markets this morning. So let's get stuck straight in. Let's go. All right, so what we're looking at first is the Aussie CAD. And first of all, what I want to share with you is the daily time frame where we had this kind of slanted head and shoulders. We were bearish for the longest time. We had a new low, then we held consolidation here for a little while. So this level here, we had previous support. We had this consolidation from around mid-May or towards the last week of May to just recently in July when we broke and closed below it, giving us a new low, and then we put in a new low. Now, the great thing about this is we started to see the EMAs fanning out. It all looked very nice for a short, except last week was a bit of a dead one, wasn't it? So we didn't really get the setups that we needed. We really didn't get price action doing what we needed in order to get an execution, but the setup wise was a continuation. So we did the identification phase, which is predict, identify the market's bearish, predict where it's likely to go. Well, as a trend continuation trader, you're looking at predicting a retest of these lows here. Okay, and how's it likely to get there? Well, we just stay there and break and close below, or we get a pullback, which will allow us to jump on. So then we go into trading time frame mode, and what I'm going to do is just bring this out on the big screen so you guys can see it really clearly. And what we're looking at is a pullback into a few zones that we drew out last week. The first one was the first chance entry, which would have been right here. Okay, if you're familiar with the Graystone trend continuation setup, you can you'll know what I'm talking about. And if you're not familiar with that, you can go and watch the whole thing either in the mastery section of tier 1, or you can watch it on YouTube. I did a 5-part series on the channel as well. But that was zone 1. And that was the lowest low to the lowest close. Then we had zone 2, which was the main kill zone, which is where we're looking for a lower low, lower close as long as we get a reward to risk of 1-to-1. Okay, and that's kind of where we are at the moment. And then finally, which I'm not going to say too much about, but which was the third chance entry, which we can draw on, but we're not quite up there yet. What I want to focus on for now is this second chance entry. Now, what we typically want to see is we know where the stop loss will go at the moment based on the current candle's ATR, okay, above the high. And we know that the target's going to be at a retest of the lows. So right now it looks like a great reward to risk profile, 2.5 almost to 1, roughly. All right, it might be a bit worse than that, a bit less than that with an actual entry. But the question is now, how do we get involved? So what I'd like to do now is drop down to the 60, and you're going to see that following this pullback here, and you might call this a complex pullback. Okay, we've got like the nice little ebb and flow in here as well. So if we clone this, you're going to see we've got that equal measured move there as well. It's not technically an ABCD because we don't pull back into the 382 for those of you who've got that rule, but it is an equal measured move there. And we're right at that level. And we're right at this little previous structure resistance level as well. Now, look what market's doing. We had this big bullish run, okay? And we know that doesn't go on forever. We hit that level like a wall. And then we put in this pin bar, this doji pin bar, this high test candle wick here, which represents what? That represents bearish pressure, okay? Bull rejection, bearish pressure. So that's great. That's one clue. That's 2 clues. The fact that where we are is 3 clues. Now we just need an entry. Now that could have been your entry. You could have entered on a sell stop order below the low, or you could be waiting for that 3-bar reversal. This will be a beautiful 3-bar reversal if we get one. We've got 18 minutes until the close of this candle, and on the close of that candle, that could be your entry. That could be your entry. So all we need to do is just patiently wait for another 18 minutes and then come back to this to see if we can enter at next bar market. If you're already in it, you're in it, great. That would be a bit more aggressive than the 3-bar reversal. And then finally, the The other way to enter this would be a double top, which would be the more conservative way, but obviously you've got to wait for that double top to form yet, so you'd have to stay here for a little bit longer. Maybe you drop down to the 15 to get that a little bit quicker. So there's many ways to enter this at the moment, and it's a real nice looking setup with a good reward to risk. We'll keep our eyes peeled on this, and we'll come back to it on the close of the hour, which will be in 17 minutes time now. So we've now got about 10 seconds until the close of this candle. And if we close here, that's it, which we have. We've now got the 3-bar reversal. So to enter this, now we've closed as a 3-bar reversal, you can literally just hit trade, create new order, and you'd be selling at market. So it'd be an at market order. Your stop loss would have to go above the high, ideally, okay? Unless you're trading with a stop loss above the high of the 3-bar reversal, or the second candle in the 3-bar reversal. But because of the reward to risk on this, and the fact that you're not exposing your maximum risk limit, you know, we're entering here at 92.52, and the stops need to go at 93.03, just above that 93 even handle. Then your targets are going to go down at the low. So 91.61, take profit, 91.61. And you're in. So a great reward to risk profile, really, really nice setup, something we've been waiting for. Aussie dollars, a similar situation, but it's not as attractive because we're not in continuation mode. We're in this consolidation mode, and we're at a structure level, a structure resistance level. We've got that 7,400 even handle number. We've also got the equal measured move for those of you who like to use that type of confluence. If we just clone that there, you'll see that we've got the equal measured move as well. And what's nice about this one is we've had some, right at this previous structure zone, which I could just draw on here, this structure resistance level, we had these perfect tweezer top candles. Tweezer top candles where we've got equal highs, which is an indication of a reversal. This pattern formation, combined with all the other confluence here as well, and for those of you who are pattern traders, you might see that there's a pattern in here as well. But the point is this is another signal that there's likely to be a push down. The problem with this is where do you take targets? Because in the Aussie CAD, we're in continuation mode. We know that there's a good reward to risk. We know that there's a strong probability of testing the lows for targets. With this one, if you're a structure-based, if you're entering this purely on a structure-based entry, then where are your targets? Probably at inside structure, maybe down at this level at worst. So is it going to be a good, it's not as attractive as the Aussie CAD. So that's, just bear that in mind. That's why I'm not looking at this one as opposed to the Aussie CAD, which we are looking at. And then finally, one for you pattern traders on the New Zealand dollar. A couple of setups here. One, if we push down to 69 14s, 15s, we're going to get an entry for a bullish, what's known as a bat formation, and we've already entered a bearish bat formation here as well, which is a great setup. It's one of the very few patterns. I don't trade all advanced patterns, particularly on this pair, but I do trade bat patterns on this particular pair. And yeah, that's it. So if you're looking at anything on the markets this week, let me know in the comments. And until next time, thanks for watching. Take care. Have a great rest of your day, and I'll see you then.